Friday after the open, stocks dropped after a horrible non-farm payrolls report. However, our stock's setting up for an even bigger drop once this major announcement is released this week. Now, even with the selling that we saw on Friday, with the SPY, we did come crashing a little bit lower intraday, but then we closed roughly in 50% of the range. When we actually break this down and look at the 5-minute chart, we scroll back, we see the gap up, we see the shooting star type of candle, and then we have a hanging man candle a few candles later. We confirm it all the way down, fill in the gap. We have a lot of consolidation on the way down. But even before we got the payrolls data out on Friday, which actually showed we only created 22,000 new jobs when the market was actually priced in 75,000 jobs. And it gets even worse from there, because if you see right here, we can see the report showed a marked slowdown from July increase of 79,000 jobs, which was revised up 6,000 jobs. However, revisions also showed a net loss of 13,000 jobs. If we go back down memory lane real quick, remember on the August 1st non-farm employment numbers, we had a huge miss. They expect 106,000 jobs. They actually created 73,000, but they revised the prior reading down to 14,000. Look at this. The prior month, they said when we got the number out in July for the June numbers, they said in June we created 147,000 jobs. However, when we got the August numbers out in the revisions, they revised that down to just 14,000. And now they're telling us that revision for June was actually a loss of 13,000 jobs. However, we had plenty of warning signs out here. If we come over and we looked earlier in the week, we had the ADP non-farm employment numbers coming out, and we can see the private payrolls increased 54,000 jobs. However, they were expecting 75,000 jobs. Now, let me know in the comment section down below, were you guys surprised by the horrible job number we had coming out? Because on Tuesday, it could get even worse. You might say, Mike, I think you got it wrong, because Monday, no major economic news. On Tuesday, what do we have? No major economic news. So how could it potentially get even worse on Tuesday? We're going to talk about that here in a few moments. Then on Wednesday and Thursday, we're going to get inflation data. We're going to have the CPI data along with the PPI data coming out. Then on Friday, we're going to get the preliminary consumer sentiment. Well, if you guys thought it was horrible on Friday, we had the gap up and the markets came crashing down, buckle up, hold on. Because if we look right here, from bad to worse, another big jobs report is coming up, and it probably won't look good either. Now, this jobs report is going to come out on Tuesday. You might say, Mike, hold up. We just had NFP coming out on Friday, and we had ADP come out earlier in the week as well. So what are you talking about? It's a little known survey that could show the big hiring slowdown actually started last year. In that report, they're expecting that they're actually going to show 500,000 to potentially 1 million fewer jobs were actually added. And that would also fit the narrative of what Trump's been saying for quite some time. Powell, you are too late. Cut rates, cut rates, cut rates. Because let's not forget, in September 2024, the Bureau of Labor Statistics reported the economy had created 818,000 fewer jobs from April 23rd to March 24th than the agency previously reported. That figure was later revised down to 598,000. So nonetheless, are we about to see stocks accelerate on the way down once this is released on Tuesday? Because if we come over and take a look at the volatility index, the VIX, even with the major sell-off that we saw intraday, the VIX closed down 10% on this session. We look at the VIX on the daily chart, you can see we're at the lower end of this consolidation that we've been in for quite some time, which is an area where we can see a volatility spike at any moment. We look at the fear and greed index, we are now back over into neutral territory. And if we come over and expand out the timeline real quick, notice, are we about to be able to crack lower and maybe, just maybe, see the fear and greed index get even weaker out? We come over and look at the most recent investor sentiment survey. We see the bulls drop down a bit. Last week, they had a reading of 34.6. This week, the bulls dropped down to 32.7. The bears also stepped up from the prior week of 39.4 to this week of 43.4. However, let's not forget about the stat that I shared with you guys last week. The S&P performance after the 12-month high was set in the last week of August, and this stat goes all the way back to 1950. Look at the stats for September. Out of the 12 occurrences this has happened, we had one where the market was flat, and that was right there in 1979. One occasion it was up, and that was in 2018. The other 10 occurrences, every single September was in the red. Now, before I share this next stat with you guys, I want to let you guys know right now, Take Profit Trader, 40% off all their evaluation accounts. Best yet, no activation fee. Take advantage of this offer. Use the link in the description box down below. Use code epitome at checkout. Now, this next stat is basically to show us the end of the year, September through December. And this occurs after we've had a 5% rally from June to August. Now, this stat also goes back from 1950 to the current time. And in this stat, if you actually look at September when this has occurred, this kind of will conflict with the last stat just a bit. We have been up 14 times in September, down 10. However, if you look at October, we've only been up 6 of the occasions where this has occurred. We have been down 18 of the times. However, it starts looking much better come November and December, where in November we've been up 18 times, down 6. In December, we've been up 20 times and down 4. So this could bode well for the end of the year, but we could be in for a little rough patch September/October. Now, when we just look at a glance of how the indices fared out there on Friday, we had the Dow down 220 points. NASDAQ was down 7.3. S&P was down 20 points. The only one of the 4 indices in the green was the Russell 2000, up 1.18. I want to bring something else to your attention as well. If you look right down here at advancing issues versus declining, notice on Friday, even though the market was down, we had 57% of issues advancing versus 43% declining. So we had more stocks actually moving up than we had moving down while we had a down market. Then we come over and look at the sectors. Notice on the sectors as well, we only had 4 sectors in the red: utilities, industrials, financials, and energy. Every other sector was in the green on Friday. And if we actually look at the 1 week performance, a little bit more of a mixed bag, where for the whole week, we saw financial, technology, industrials, utilities, and energy were down for the week. Now, if we come over and we take a look at the Dow Jones chart on the top versus the transportation index chart on the bottom, keep in mind, we still have the divergence in play. I just simply got to go ahead and extend the line out to the right here just a bit. Even though this week, diamonds were able to make a new all-time high, the transportation index could not even get above the most recent high that we've had. And we can see we've been making a series of lower highs as the market's been going up. Then we come over and take a look at the SPY versus HYG. HYG being high yield bonds. Now, this is a little bit more deceiving because we can see the SPY came up, made a new all-time high. HYG, it's up close to making new all-time highs, but it did not. So once again, we're starting to set up some divergence. However, could this be nothing more than a trap? And what I mean by that is fake the sell-off on Friday only to go ahead and rip it right back up. Well, we definitely want to keep an eye on the 2-year versus the 10-year bond. And we can see it's starting to creep up once again. If we start to see this steepening quite a bit, watch out. That's when we have major problems out here in the market. So we want to pay attention to the dollar index. Dollar index, a little bit of a wick on the bottom. The dollar index still looks weak at this point. If you like trading the gold, the precious metal gold on Friday was able to make another new all-time high, but we do have a little bit of a wick on gold. If we start to see a pullback, watch out for the high volume area on the composite profile down here about 3403. Now, when we come over, we take a look at the SPY real quick. Let's start off and move this right over here to the weekly time frame. On the weekly chart, what do we have? Well, a little bit more of a bullish candle than a bearish candle. You can see we closed roughly in the upper third of the range, but we do got to take note. There was a wick on top of this candle. And when we look at the MACD indicator, you can see it's starting to round off just a bit. This could be the early signs that we're getting ready to turn back down. And if the MACD indicator does cross bearish on the weekly chart, we're likely going to see a more sustained move on the way down. Now, when we look at this on the daily chart, here's that candle we had on Friday. We came right down to the anchored VWAP. We bounced right back up, roughly 50% of the range. And we're really having a hard time getting below this high volume node on the profile at about 644.27. If we can get back below it, I still think we have a good shot of spending some more time building out some volume within the minus development area, working down towards the swing point over here. And if we can crack that, maybe we can get a downtrend to start to form. Look at the MACD indicator. As we continue to march up with price, the MACD indicator continues to make lower highs while the market continues to move up higher. Now, on the 4-hour chart, you can see we had that opening candle, big, nasty, bearish engulfing candle, and then we started to come right back up. And again, the MACD indicator is basically telling us, watch out, as price is moving up higher, the MACD indicator is not confirming the move at this moment. Now, when we come over and start looking at the 30-minute volume profiles, notice we have a B as in boy shaped profile. This would be a lowercase b. but we have very poor structure, a huge minus development area within the profile. That's going to be anywhere from about 647.38 up here to about 649.65. So I do think highly probable we will come back in this area. Now, quite often when we have a minus development area, first time we come into it, we reject back down, and then we'll see if we go a second or third time, then maybe we have a good shot of running all the way back up, make it another new all-time high. I do want to caution you guys, early in the week, we have no major economic news to contend with for Sunday, Monday, or even Tuesday. So now we come over and look at the futures markets real quick. Let's start off looking at the weekly volume profiles with the 4-hour candles. And we can see here's that nasty sell-off 4-hour candle we had right here. And notice right where we came back down towards the high volume area on the composite profile. Now, also notice we were able to spike above the high right over here. We came right back down below it, closing right within the range. Now, value area high will come in at 65.06 and a quarter. The point of control will be down here about 64.81.75, with value area low being 64.21.75. Now, as I'm looking at this profile, we really have the huge edge with volume profile if we can get outside of value and come back into it, or we break, in this case, maybe above value area high, then I would expect the market to come back towards candle bodies at about 65.29 and then potentially run up and make a new all-time high. However, I want to caution you guys, because if we really start breaking below this high volume area on the profile, we're likely going to spend a little bit more time within this area of the profile and then maybe work our way all the way down towards about 64.14. When we come over and we start looking at this on the daily profiles on the 30-minute chart, notice we have that B as in boy shaped profile. Now, there are a couple things that I want to talk about. In Thursday's video, I warned you guys, we had 3 reasons I thought the market had a chance of coming down. 1, we had 3 consecutive untested point of controls come Friday. And on Friday, we were able to take one of them out. Also, on Thursday, we closed outside of value area high, which increased the probabilities that Friday or Monday, we were going to come back and visit that level at 64.94. We also had the P point, the floor trader pivot, sitting right around that 64.94, which we were talking about on the live stream on Friday. Now, if you guys don't want to miss the next time I go live, make sure you're subscribed and you have the bell notifications turned on for all. But I want to go ahead and map out this minus development area on the profile. This most certainly is going to be an area of interest for me. And in this case, I'm actually going to move it up just a slight bit all the way right here to the candle body. Now that zone is going to be anywhere from 64.93 and a half all the way up here to about 65.14.75. So as I'm looking at this, just like we talked about with the SPY, the first time we come up into this area, quite often the market will either consolidate up in this area or we will reject and go back down. Now, do we go all the way back down and take out Friday's low? The jury is still out on that one. But if we do come up in this area, it's highly probable we will break above value area high at 64.94 and a quarter. Then if we come back down below it, well, that's going to give us a good target location for target number 1 for a volume profile rotation trade, which will come in at 64.80.75. Then we have value area low if we break below that point of control, which will come in at 64.55.75. Anything below that price point, I would then want to focus on the additional untested point of controls that have been left behind. 64.48 and a quarter would be the next one. Below that would be 64.25.00. Keep in mind, this week, Tuesday, we had that major jobs data coming out. Then we also have CPI along with PPI coming out this week. Now, before we go ahead and take a look at the NASDAQ, I want to go ahead and announce the winner from the last video. And the winner of the free Take Profit Trader 50K test account is Luke. I've went ahead and sent you, I've replied to your comment in the video. You have 48 hours to respond and we'll get that account transferred over to you. So now let's take a look at the QQQs on the weekly time frame. You see we had a pretty bullish close out here for the week, closing in the upper third of the range, but we do have a little bit of a wick on top of this candle. Now this week, we were not able to make a new all-time high like we saw with the SPY, but then come down and start to look at the MACD indicator. Notice we have that round effect and notice the two lines are starting to get closer together and we are elevated above the 0 line. And if they do start to cross on the way back down, it could be a substantial move back down. Look at the last time we basically got a bearish cross of the MACD indicator. You can see right up here from the high all the way down to the low where we dropped was roughly a 25% drop on the NASDAQ. Then we come over, look at the daily chart real quick. You can see we came up high enough, breaking the swing high right over here. which would invalidate a potential downtrend in place where we had a high, we had a low, we had a lower high, and then we did not quite make a lower low. But if we could have turned down before he took out this high, we could have still had the case where we had lower highs and lower lows. Now you can see on Friday, we closed with a massive wick on this candle. We were not quite able to make it all the way down to the first anchor VWAP. And now the MACD indicator is still trending down, but it looks like it may be in the early stages of trying to firm up. Are we about to see the NASDAQ make a new all-time high? Or can we start to come down, breaking some of these swing points down below us? On the 4-hour chart, you can see the MACD indicator did get a bullish cross on the way up. And if we start pushing up higher, we're probably going to see the peak in the MACD indicator on the 4-hour chart push above the peak over here. And that would be constructive if we're going to try to make a run to new all-time highs. But I want to remind you guys, September normally is not favorable out here for the stock market. Then we come over and look at the 30-minute chart and notice we have that B as in boy shaped profile in the MACD indicator, basically flat line being above the zero line. Now there's an area I want to map out, and that's going to be this entire zone right up in here. I'm going to include this whole area as my minus development area. Now, the first time we come up into it, quite often, the market does one of two things. Either consolidates or rejects and goes right back down. On occasions, we will just slap right through that level like it was never even there. But I would anticipate some type of knee jerk on the way back down. Now, if we were to pull a fib from Friday's high all the way down to Friday's low, notice we were able to come back almost to the 50% Fibonacci level. So it's not really far-fetched to think that maybe the NASDAQ will hit the 61.8 or maybe even 786, turn back down, and then that could set up an ABC pattern on the way down, which would actually break below the lows on Friday. Now, if we were to draw that out, A to B, and just assume that we come up to the 61.8, then that would give us a price completion down here at about 567.89. But one thing to note, if we start breaking above the 786, 579.17, we're probably going to go ahead, undo the high from Friday, meaning trade higher than the high from Friday. Then on the daily chart, look left, we'll probably see the NASDAQ making another new all-time high. Now we come over and look at the NQ futures markets on the weekly profiles with the 4-hour chart. I really thought that we had a good shot on Friday coming up and spiking up and maybe hitting that point of control at 23,933.5, but then we got that knee jerk on the way down. Now, as we look at this, you can see that we had the full rotation up last week on the volume profile. This week, we closed below value area low. Now, value area low will come in at 23,731.25. We're going to have the point of control down here at 23,426.25. Value area low will be 23,302.25. Now, notice any of these values that we have within the profile that can act as a magnet attracting price back down towards it. Now, on the way up, we also have a minus development area above us. So if we start breaking above value area high, I want to see, can we come up towards the top of the minus development area, about 23,766, then the high volume node at about 23,785. Anything above that, see, can we come all the way back up to the top of that big nasty candle on the way down, somewhere in the ballpark of 23,848. Above that, I'm looking for the high, and then that point of control at 23,933. But in the event that we break up above value area high anytime this week, and keep in mind, on Tuesday, we have that major announcement coming out. But if we break above that, and then maybe on Tuesday we start coming back down, I would want to use this high volume node as a target location, 23,640. Below that, see if we can come back and re-auction this minus development area, then the point of control, and then down here towards value area low. Anything below value area low, I will want to target the next high volume node at about 23,221. Then I want to come over and start looking at the daily volume profiles. On Friday, when we came down, we were not able to take out the point of control that was left behind from Thursday at 23,498. Also, as we take a look at this, notice on Thursday, in Thursday's video, what did I talk about? Whenever we close outside of value, highly probable that either Friday or Monday, we were going to come back and visit that level. Well, we were able to take that level out, but we were not able to take out the point of control. You might say, well, Mike, didn't we have consecutive untested point of controls? That would be untrue. We have one point of control here. We have a second one up here, but look at the point of control that was left behind from September 3rd. You can see right here on the 4th, we spiked down to it. We were able to breach up. We were able to break up and out of that area after testing that, where when we looked at the S&P 500, we came very, very close to hitting the point of control right here on the third, but we never took it out. Then on the third, when we left that one behind, we came nowhere close to it on the fourth. And then the one that we left behind on the fourth, we were able to go ahead and take out on Friday. Now, jumping back over and look at the NASDAQ on the 30-minute chart with the daily volume profiles. Value area high, 23,781 and a quarter. The point of control, 23,646 and a quarter. And value area low will be down here about 23,566 and a quarter. Now, notice this area, the point of control, is an area where we had the most amount of contracts traded, and we kind of have a little minus development area within the profile right up in here. I'm going to go ahead and highlight this area, and that's going to be anywhere from the ballpark of about 23,696 and a half up here to about 23,768. Now, just like we talked about with the Qs, the SPY, and even the S&P 500, the first time we come up into this area, quite often, the market will do one of two things. It'll either reverse back down, we'll consolidate this area, building calls to go ahead and push up and through that area. Now, on occasions, the market just simply ignores those levels, and we'll see the market pushing back up. Also, something else that you probably want to do, grab a Fibonacci retracement from that whole entire big down candle that we had on the 30-minute chart. If we start breaching 50% of that candle, quite often from that point on, it increases the probabilities that we will undo that whole entire down candle that we had. Now, in the event that we come up towards this area and then we end up rejecting and going back down, we got the potential to set up an A to B equals C to D pattern like this. The A to B leg, and we'll just go right to the middle of that zone right there. And then we go ahead and we project down here for D, which will be 23,333.75. You might say, Mike, why 75? It says 0.67. NASDAQ trades in quarter point increments. Now, to be fair, there could also be a potential ABC pattern on the way up. If the market comes up into this area up here, comes down, and then turns back up, then we'd have the ABC pattern on the way up. We'd have the A to B leg here. The B to C leg would be the corrective leg, and then we would project for the D completion on the way out. If that does start to shape up, we'll talk about that more on the live stream. Now, if you'd like to learn the shocking truth about Take Profit Trader, then you want to make sure to check out this next video right here.